Good afternoon, everybody. Please come in and take a seat. Yeah, absolutely. Yeah, feel free to just grab a seat. My name is Richard Smith, as you know. I am an independent financial advisor over at the Finance Zone. We are duly authorised by the Financial Services Authority, as some of you already know. Um, can you all hear the birds singing outside and and the road being dug up? What a great time to do a presentation. Perhaps could you just close one of those windows for me so we can just tighten down the noise? Okay. I do apologise, ladies and gentlemen, for this. I got a bit of a cold and I am a bit bunged up, and I'm also recording this presentation. So if you don't want to be recorded and used at some stage in the future, I would suggest you don't say anything at all, but hold your questions until the end. So we're here today to talk about pension annuities and your options. The pension annuity is a relatively straightforward product in that when you get to your chosen retirement date, you have several options with what to do with your pension money. And one of those options is for you to purchase a straightforward pension annuity, which is an income for life in return for giving up a lump sum. Everybody clear about that? No. The important issue there is that currently under the Inland Revenue rules and government legislation we're working with, despite this thing that was called pension simplification a couple of years ago, most people end up getting to retirement and purchasing an annuity or moving it into some form of a deferred pension where you can have the tax-free cash now but rely on the income to be drawn from the fund at a later stage. But at some stage in the future, most people end up buying an annuity. So what are your options? Okay. This is a fairly complex area, and I'm going to rattle through some of this stuff, and there's plenty of time for questions afterwards, but I just wanted to give you a brief overview. Now, this is what you must do when you get to retirement date. When you get to that chosen decision time about what you're going to do with your pensions, you absolutely must get an independent advisor to compare the market for you. It's only an independent financial advisor that can actually do the comparisons from the entire marketplace and give you the information you need. And I'm going to cover in a bit why that's so important. No, if you've got a pension with a bank or building society, those organisations are normally only tied to their own insurance company or their own in-house product, so they're not able to provide you with independent financial advice. In an ideal world they would, but most banks and building societies, actually nearly all banks and building societies, are tied to one organisation. You must understand with annuities is that once the income is paid from it, once it's been set up and the income starts to be paid, it's fixed for life. I've just seen I've missed a typo there, but I'll have to stay in there. I've missed a bracket. Okay. Once you've converted your pension into this thing they call an annuity, it's fixed. There are some options in the marketplace at the moment which can give you a bit more flexibility, but in the main they're fixed. You make the decision. The insurance company pays to you your tax-free cash. The rest of the money goes to provide you with an income for life. And once that's done, that's done. There's no going back from that. An annuity is normally payable up until death or for life. So unless you die, the income stops, unless you're building the guarantees. And this is why it's really quite important that you consider taking independent financial advice in order to work through the options. And this is vitally important. This last point is that you must not be bullied into accepting what your present pension provider or insurance company provides for you, because they will give you a statement and they will indicate that perhaps that's the best deal available, or indicate that it's not that flexible. And most are now getting better, and you'll normally get some Financial Service Authority leaflets explaining that you have this right to take an open market option or take an option with your pension pot to move it to another provider. The option to move your pension to another provider in order to get a better rate. And I can more or less guarantee you for everybody, moving it will be in your best interest. So this annuity is your pension at your normal retirement date, which can be 50, 60, 65, 70, when you decide really. Some plans have a fixed date. And normally in the 2 months in the lead up to that fixed date, you'll start getting information from the insurer. We've already covered what an income or an annuity is. It is an income for life. It's not a particularly complicated product, and the rates depend on interest rates in the market generally. Currently, interest rates are what? They're very low. Government bond rates also don't gilt rates don't tell the truth either. So annuity rates are not looking that great at the moment, which is why it's even more important that you take some advice. That bird's really noisy, isn't it? Whether it's a thrush or a sparrow. I probably haven't seen birds on that. Okay. But this annuity, this income for life, is separate from your tax-free cash. That's payable as a separate amount, and for most people, it's nearly always in your best interest to take the tax-free cash from your pension pot. And you get this option, as we mentioned, to move to another provider, and that's really what we're talking about today. And the importance of that is that there's a very, 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 very good chance it will pay you some more money. Okay, certainly if you're a smoker, any smokers in the room? A couple go. You've really got to give it up. You really should give it up. But if you're a smoker or you've got other health issues, we can very often get you a better rate, what they call impaired life annuities, where if you've got any illnesses or diseases or any poor health in the family, we can very often get you a better pension. And also the postcode lottery. Now, like any other government departments, in terms of the services they offer, there is a bit of a postcode lottery. You've probably heard of that in relation to the National Health Service and the different treatment of hospitals around the country. They say it's a postcode lottery. Well, certainly, if you're looking to purchase an annuity, postcodes are vitally important, because certainly in pockets of the country, the life expectancy and the health is assumed to be so much better, and indeed proven by the postcode linked statistics. And so if you're living in a certain postcode, you could get a potentially better annuity rate by moving provider. This is going to be a very brief presentation. I just want to outline here for you the effect of moving your pension to another provider. This is based on a particular sort of research I was doing for a client this week. And if we look at these figures, the middle figures here of the Canada Life at 582, these were the sort of top providers in the marketplace. And this is for a £10,000 investment. This is for a £10,000 annuity. And as you can see there, the Canada Life are offering £582.84, and the Prudential are offering £553, which is some £50 per year difference. Multiply that up by the size of your pension pot, and you're going to feel for how important it is that we move these plans. Bear in mind that's payable for life, so it's £50 a year. If you live for 10 years, that's £500. And if you're buying buying with a £20,000 pot, that's £1,000. So it's certainly worth doing. And bearing in mind this would normally be at no cost to you. There's no downside for doing this. And also, if we look at taking into account these things called impaired life annuities, or getting you a smoker annuity, then those rates are going to be substantially higher than that potentially. But this is why it's vitally important that you take advice from an independent financial advisor and work through the options in ample time, well before you actually need to start making some decisions. And as I said, these aren't your only options. There are a range of options around your pension at retirement and how you take those benefits. And don't be bullied. The more work you do now, the more research you do now, the longer the leading time, the better the decision is going to be. And I can't over-egg that. I can't tell you to do that. It's one of the most. You must do it. You must take the time to consider your options well before you need it. Anyway, more than happy to take the questions afterwards. The bottom line with annuities is you absolutely must take advice. There is a very, very, very good chance that we'll be able to get you a better rate by moving your pension to another provider. More importantly, if there are any health issues or if there's any hereditary illnesses in your family, there's also a good chance we can get you a better rate. Importantly, once you've made a decision to purchase this annuity, it is going to be fixed once it's in payment. Anyway, my name is Richard Smith. I'm one part of the business called the Finance Zone. My telephone number there, 0845-226-9106, and there's the details of my website, www.thefinanzone.co.uk. Thanks very much for listening. I do apologise for my voice, it's not that great today, and I'm more than happy to take any questions that you may have.